Bill, welcome. So clearly we can see a lot is going right here. I want to point out the market cap is over $6 billion. Revenue in the quarter, just over $64 million. So quite a valuation here. Tell me about how you're structuring yourselves for growth and to what degree you're being cautious based on what the demand environment might be in 22.
Yeah, I think that, when you look at Braze's addressable market, we're still very much in the early innings, and we're also benefiting from a lot of secular tailwinds and trends that have been kind of pushing momentum in our direction and compounding with each other. So when you look across the board, the move to first-party data, which I'm sure that you guys have spoken a lot about in the last few months as we saw the changes from IDFA recently. Obviously, the digitization that's happening through COVID. We also, more narrowly in the customer engagement space, have seen changes in the craft of customer engagement, that it has become a more interdisciplinary activity. All of these things are really benefiting Braze and kind of leading to additional tailwinds. And you combine that with just how early we are in this market. We're still investing very heavily, and we see a ton of opportunity ahead of us.
I wonder, in your investment for growth, which of course is important, to what degree do you structurally hedge for potential downside, operationally, either in how you hire or in how you structure the infrastructure that you need for growth? Because if demand does slack off at some point, even temporarily, on the way to that total addressable market figure you mentioned, how are you prepared to handle it?
Yeah, so I think a lot of that comes down to the diversity across the dimensions of geography and across verticals, as well as across the different use cases that we service. If we go back to the early days of 2020, in those first couple quarters, what we saw was obviously slowdowns in a lot of in-person commerce and a lot of other kind of events and travel and such. But in our own customer base, we then also saw massive acceleration in businesses that would be providing things like digital services, on-demand delivery, et cetera. And so when we kind of look across all of the diversity of geographies and verticals that we have an ability to quickly pivot and change our own focus. Definitely when you look at the revenue growth of the last couple of years, the total amount of revenue growth was not a surprise, but I would say that the composition was, because we saw a lot of growth in financial services. We saw a lot of growth in health and wellness. We obviously saw other categories like travel and hospitality went down, but Braze is able to actually operate across all these different verticals. So as long as we've got our finger on the pulse of what's going on from a consumer standpoint, and we've got good visibility into our pipeline, then we can put investments into the right place and really check those downside risks.
All right. Bill, the stock there now up 15.5%. The CEO of Braze, thank you.